Good morning, everyone, and welcome to the European Crossover webinar. And I was just sent out some invitations onto the other rooms, just so they were aware. So that's why there was a minor delay here. I'm just trying to get my headset hooked up right. Okay, as you can see, we're still pushing, as they say, marathon running, blowing and going with these indices. Look at them, just still moving along. And look at the spoofs here, same thing here, just pushing further up here. We are expecting a pretty good NFP. I know that the ADP was a bit of a disappointment, but the thought is that it's going to not mirror what the NFP is looking for, and I've seen some counts looking for 895,000 on NFP. So we'll have to see what that plays out. Bear with me. Let me take a look at some of these predictions. Yeah, they're looking for 870,000. Is the forecast. Last month was 850,000. And you would think that that probably blows some doors here on the upside. The key will be whether we do see some follow through in the sense that we see it sustain above that. If we do break up above here in the S&Ps, and certainly here with the NASDAQ, I mean, we're way up here in the stratosphere. You can see here, bear with me. The weekly key volume is going to be down here at 15,030, way down here. So we can still come a long ways down here. So we'll see whether or not. And also yesterday, the volume for NYSE, S&P SPYs, I think it was 37 million. It was like horribly low. So we're just going to find out whether or not the key is going to be not that if we pop above here, but whether or not, and I'm talking about SPYs, not S&P futures, but the actual SPYs, SPY. The key will be if we get above it, and like I said, sustain it, or what they like to say in profile talk, whether we get acceptance. So you get above there, and does the market accept it above here? Do we just fall right back down, or do we accept it and then that's going to hold us and obviously going to allow for this to push higher? NASDAQ just coming off a little bit, no big deal. Look at some of the other key markets. Look at gold. This thing is just going lower like a submarine, honking the horn. We talked about that previously. They look like, oh, okay, they kind of fooled some people when it ran up here and then it fell apart. Then it made another run and it fell apart again. So you have to think that there are just some people that just got trapped. And we referenced that yesterday, thinking, okay, well, we can get down to 1802. And we made that move down here. And look, so those people are trapped and even if there were some people that weren't trapped, do you really think someone's going to say, wow, I have got a bargain. I can buy gold at 1,800. Yeah, F that. Those people are going to be like, oh, hell no. I went and dodged this bullet big time. And they won't, but like I said, it looks like we're going to go down to 1770 down in here. Initial support's going to be 1792. But like I said, this market remember how it's been stuck against as 1818. We finally broke above and we fell back down and rotated lower down to 1800. I think we even got a dip down to, I think it was 1796. So it's like, wow, it's really holding up really well. So when it broke above here, it's like, whoa, it's on its way. And it did look like it. I remember I myself said, hey, look, if we can get a close above 1824, there's my 1824 right there. You see that line. Said, hey, then we're going to go and move higher. The next stop would be 1875 on that continued follow through. But we kind of hung around there and then we fell back down. But in its defense, it was still holding above 1802. So it held down to that. Remember, before that area, we had 1812. So it did hold this 1812. So you're like, okay, it's rotating between 1812, 1820, just above that 1818. This is the VWAP from the March low. So, okay, the jury's still out. There's still a chance. I mean, it looks like it's going to go lower, but there's still a chance. And then wham, this thing runs up in here. And I'm like thinking, whoa, you know what? Now it's on its way, only to trap a bunch of bulls in here that were still hanging on, thinking we're going to get that. And hence, that's why we've slid down here to this 1802. We're actually lower and can go and push beyond that. But I'm just saying, if you're thinking, you might have some people that wiping the brow saying, wow, I dodged that bullet. Now let me just go in and buy at 1800. Yeah, right. That's saying this thing's got to break lower. Like I said, depending on what it wants to do with NFP, even if it rallies on NFP. And this is what I think is the reason I'm sticking on this one. We won't look at the technicals, but you can look at a market from a structure standpoint. I got that from Blake way back in the day. And that's why I tell you lots of times, there's many ways to skin a cat. Not trying to say my way is better than somebody else's way, but I don't use oscillators. I don't use oscillators at all. I don't believe in oscillators. It's like, it's overbought. It's more overbought. It's crazy overbought. It's bananas overbought. Well, you know what? We don't even have to even look at gold. I mean, we can go and look at the NASDAQ. This market just has to come down. It is so overbought. I mean, it's still overbought. Oh, I got to mortgage the house because it's really overbought now. I got to mortgage the house and my neighbor's house because it's really overbought. Well, now I got to come to my relatives to see if I can mortgage their house too because it's really overbought and we're still going higher. That's why I think, to me, sorry, don't mean come off the wrong way. I think that oscillators are just a bunch of you know what. You see what I'm saying? Because like I said, you can look at a market and all you have to do is, and I'll pull up the gold, and I did want to focus on that today so we can spend a little bit more time ahead of NFP, and we'll take some time doing our analysis. But I'm just saying is you don't have to look at this to say, I don't need to look at RSI to say, oh, you know what? I think I'm seeing some divergence here. I don't need to look at RSI or stochastics. You're already seeing it right here, and potentially this market can break. But once again, without even looking at that, you can just look at the structure of the market and just say, wow, you know what? I think some people are trapped. You know what I mean? And they've already been, and when you think about it and you just put yourself in that person's shoes potentially and say, there's going to be some people that were looking for a breakout and they didn't get the breakout. And we can see from, back here, we got this pullback, the market held, okay, well, they're still holding, there's still hope. I've got my stops, some might say I've got my stops below 1790. I have my stops at 1785. So we're holding like, oh, wow, we're finally getting going. We rally up there. And then the person's like, whoa, I cannot believe this. This is a bunch of BS. Here I am back to basically flat. Maybe I got a couple of nickels in my pocket. And there's going to be some people that are going to say, you know what? If we rally, I'm going to get the F out. There's going to be some people that say, I still believe in this. And there's other people going to say, well, if we rally, I'm going to get out of at least a quarter, if not a half of my junk, and I'll see whether or not it rallies. And then if it rallies and sustains, then I'll get back along in the second half. So essentially, that's what's happened here. Don't tell me it was any other way. When you rally like this, and look, you rally, we break above, and look at this break. This gives it all back. You see what I'm saying? So those people, when he got up here, they got the hell out of Dodge. And so if you think someone got the hell out of Dodge and they said, you know what, I got a fantastic area to buy again, I'll be glad to go and buy it. You know what? You need to back away from that crack pipe. Because like I said, look, and then we get lower. And that's what I'm saying. I'm like, okay, this thing's going down to 1802, which has been a key support. You don't have to be a rocket scientist. You probably don't even have to be a middle school graduate to know that thing was heading lower. Because, that's where they're going to go and pick it up, or that's where they're going to rotate it to, and then they'll see whether it holds or not. But once again, you have to think about all the people that are trapped here, and then probably some people are like hitting themselves over the head saying, how the hell did I now get out of this? So that's what I'm saying. Then you can have some people going to say, you know what? I'm going to get short. I never thought gold could rally. I'll just put my stop above here. So once again, even if you were bullish gold, you have to figure, wow, you know what? I might as well just go and move my entries lower here. And I'll try and pick it up around 17, see if they take these stops out. I'll try and pick it up around 1787, because in all likelihood, that's where they're going down here. And like I said, is NFP going to turn this thing completely around? Not likely. If you think about it, you have to look at some other things too, which I pretty much focus on the technicals. But if you look at this, look where the heck rates are. 10 years are at 121. If this market can't rally with that, then what will it take? And the dollar index, it has moved higher, but it's come off the basement. So we in the dollar index, we've moved from the basement to just a little bit above the first floor. And if gold can't rally under those circumstances, how's it ever going to rally? You see what I'm saying? So my guess is we're going to go down to which I thought before, but then this market ended up holding here. I thought when we got here, I thought, okay, when we were rotating, we're bumping up against 1818. I'm thinking, you know what, this thing looks like it's just going to fail. And I think it was the last FOMC. It was not this last one, but the one before. I thought, okay, well, if it can't break out, we're probably going to go to not only 1770, but probably get down to 1740. But we did go in and break out. And so this gave the bulls, you know, and you can see right here, what's going on. And I thought this was important for other markets too. Bear with me. So this gave the bulls, you know, the bulls some, I don't want to say confidence, but it gave them some hope. You see here, we did rally above it in here, but look, this whole area, they were saying, hey, look, you know, we're just building a base. I'm telling you, dude, we're building a base. We break above this. You can extend this out. And, you know, we're probably looking right around, you know, close to 1870. Now, I wasn't looking at that base. I was looking here at this top, and I was looking for 1874 if we were to get above 1824 and hold, which we did, but we fell apart. So that's what I'm saying. You had the chance to break out, and we fell apart. So I'm like, no, this thing's going to go lower. But like I said, to its credit, bulls were like, no, it's still holding this base. It's still holding this base. You know what? I don't know about you, but I'm picking it up every time it gets below 1800. So, you know, to their credit, you can see here, they were right. And it was like, okay, well, they've been right so far. They're holding up. And then, you know, then essentially we get up here and they're like, you see, I told you, we're getting back up here. But then we fall apart. And they go, well, we're still holding, dude. We're still holding. And then here, this was just plain old ugly. We go on and hit the stops here. And then they completely sell into this. Look at this. It got up to, you know, let's say 1833. And look, it fell all the way down to 1807. So it finally breaks out and it falls $26 in a 2-hour time frame. Do you think that's bullish? So when it holds here, it's going to have to go lower to test more stops. Now it's holding here at this 1802, but really the door's open for this to go lower. And once again, you would really have to flip the script to get this to break higher. I mean, the dollar would have to come under so much pressure, it'd be crazy. And once again, we already have bonds, 10-year rates at 121. If this thing can't rally under those circumstances, when is it going to? So any rally back up here is just going to allow for people to get out of their positions. And even if we were to try and sustain it, the market would have to do a lot of work, because that's what I'm saying. Then you'd have to be back here and said, people going, oh no, you're not going to fool me this time. There's no way I'm going to buy this. So even if we broke higher, we'd end up having to come back in this area and do a lot of work before we could try and push higher. So enough of that. I just wanted to go on and share that. I thought that you can, regardless of what market you're looking at, but I thought this was a good example. You can use that to kind of focus. And I'll show you a complete difference here. Complete difference, okay? Let's go on and go to another market. Now look at Bitcoin, okay? Now look at the difference here in Bitcoin. Okay, broke above it. Remember I was looking for 41.6. Certainly didn't look like I was going to get there. And sure enough, I'll be doggone if we didn't get there. We made it all, I think it was a 41.3, but we made it to 41.6. We fell back. Now we fell back and look here. Let's go on in. Let's go and do this right here. Okay, here we go. So we pop up above here, but right now that so we finally remember we had set this low here. Bear with me. Remember, we were looking for this market to get down here, and we just went with the levels, and then we went with the 88% day confluence, and actually we did a pretty good job there. We had 29,200 and the low was 29,299. So it's pretty doggone good. But look, we gapped up. So it's like, wow, this thing really, you know, took off. And so then we got here and the market pushed above here and you're thinking, wow, it failed. And it did look pretty bad there, but overall it was still holding. You see what I'm saying? But look at the difference from gold. Look at that. It was still holding, but look, once they got above here, they took off like a banshee. Hang on. There we go. They took off. Look at that. Now you're going, oh, but they fell. But look, they're still holding above this area here. Go back. But you see, they're still holding above that. Unlike gold, that yellow dog, you see what I'm saying? This thing is not only did it not fall back into the range, which gold not only fell back in the range, now it's actually going towards the bottom of the range. Bitcoin, it broke out, it fell back, but it stayed within this range. Now, I myself thought, okay, it looks like this thing's going to slide, but to its credit, it held. Now, if you look down here, you see how they took some stops out? They took the stops out here. There was no follow through, and wham, the thing took off. Now, it took off, broke back above this range, and stayed above it, came down to test it, and look, it's still holding above that. So that's what I'm saying. There's a complete two diametrically opposed markets, how they've handled from the range area that they broke out. And you can see here, look at Bitcoin. It's over here, you know, closing in on 41,000. And look at this dog of a market. You see what I'm saying? Now, how someone can be bullish gold is beyond me if you're just looking at the charts. Just looking at the charts. How the hell can you be bullish gold? Now, if you're bullish gold for a 5-year time frame, that's one thing. But I'm just saying this market looks like it's got to go down here towards 1770. And possibly, like I said, we talked about that previously before, 1740. But you can see right here, we need to take these stops out for starters. And then if the market were to hold the 1770s, then we could go higher. Now, like I said, things can change. But right now, this thing looks like turd on a stick. There's no doubt about it. You break above it. What a difference between Bitcoin. You see what I'm saying? You break out above it, just like Bitcoin broke out. Bitcoin fell back. Bitcoin held the range. The next time it had a chance to go back out, man, wham, it flew up and is holding above. Unlike gold, which challenged above here, fell back in the range, challenged back up, and then people just sold the piss out of it. And lo and behold, we're back to 1802, which we've used that 1802 quite a few times in the past and was actually our bias chart support for today. Plus, I think beyond that, I think we had 1791, but it really looks like we're going down to potentially to 1770. The NFP report, well, you know what? Maybe you see a change, whatever, but if you look at this in the bigger scheme of things, it just looks horrible. They build it, they broke out, they failed, they tried one more time, failed again, and the last time, everybody got the hell out of Dodge, and here we are back at the lows. So enough of that. Let's just go on and quickly move into the analysis. Just wanted to share that. Those are two perfect examples. And like I said, why you don't need, I mean, use what you want to use. You don't need stuff like RSI and stochastics. Those are just silly stuff. They're simply, look, no offense if you use those. They're simply just derivatives of price. That's all it is, derivatives of price. Now, if you want to look at it on a much longer time frame and say, well, I'm looking at the RSI because, you know, if you look at it, I use it on a daily. I really don't use it on an intraday or whatever. Once again, I don't have to look at RSI to know that this thing is diverging. You see what I'm saying? I could care less if you're going to say, oh, yeah, but can you say that, you know, it actually went to 75 versus 72? I don't give two rats, you know what, about that. Sorry, not try to come off the wrong way. I'm just saying that's the way I look at it. I try and look at the market information that's telling me as opposed to these oscillators that just don't make a hill of beans for the most part. If you use them, you know, more power to you. I'm just giving you my take on it. I haven't done one of these. I know we have a lot of, you had the Forex Flow, a lot of the new people come in. I just want to go and share that. I might get some people, their dander up in an ire or whatever, but I'm just telling you, look, just telling you at least what works for me, what works for you, that's fine. But I'm just saying there's other things to look at if you're trying to trade than these oscillators. I think they're just a bunch of guff. Anyway, enough of that. So now I got off my soapbox. Taking a look at non-farm payroll, we are looking for 870,000. Last month was 850. The ADP it's a big miss, but ADP hasn't been that close. I mean, it has, but it's kind of been hot and cold over the course of the last year, probably almost a year and a half. So a lot of people are discounting that and still looking for a strong number. It's going to be interesting to see how it reacts to the strong number, because the problem with the strong number is then you got the concerns of tapering. Anybody knows Jay Powell is not going to be tapering. I don't care what they say, they're not going to. He even told the market, I will let you know months in advance, well in advance. So he's not going to come out as something as critical as what you would call the next meeting coming up. I can't even think of the name. It takes place in frickin' Montana. I can't even think of the name. Jackson Hole. Okay, that would to even hint at tapering at something as significant as Jackson Hole would really be sending a message to the market and would spook the market. So I don't think, we probably have to see another two before if we saw, let's say we saw, okay, last month was 850,000. Let's say that we had an 870,000. We'd have to see another 870,000 before I think they'd even hint. So that's just I'm just saying the way I see that is coming out. The thing is how much further can they sink? And then the market may say, well, what if they do taper? Well, I don't think they're going to anyway, but that there should be that concern. But once again, we're well up in here. We talked about this, I think it was the day before yesterday, maybe it was yesterday. If you look at the daily, you can see here. If you look at this measured market move from November to February, and then you duplicate it, and that comes here, and we did get a decent okay dip. Nothing of any real big significance, but that's the closest thing we've had to a dip here. And you extend that measured move out again, then that puts us right to where we were at these highs. You see, now we're above it, but we do have on a very short-term basis this 161%. There's other moves from up here that we have to go to 261%, and that takes us well above like 16.7. Another one is 17.7. Not that we couldn't get there, but I'm just saying, so you'll want to keep an eye up in here to see if we kind of blow out some shorts. Supposedly over the last couple of weeks, there's been like a ton of put buying. And so maybe we need to blow these people out, and then we'll have to see once again, do we get acceptance above this area? Yes, we can move above it, but do we get acceptance, meaning the market will hold and accepts it like, hey, that's it. That's a new range. Then we can do this new leg up. But if we get above here and then we see selling into it, then that really opens the door for us to move lower, because once again, we have come to this measured move, and that just happened to match up right here. And you can see, although it's been bullish, it's really in very tight ranges, and the market just basically, we're kind of like, spinning our tires up here. Although we're on the positive side, we're still spinning our tires. But if we slide back here, just like gold did, that opens the door then for us to move lower. Do we see that? Well, it's still very quite bullish, but just want to go and hit those key points. So with that, enough yakking. Let's see here. We do have Canadian employment too also. And we have at 10 a.m. Eastern wholesale inventories, and we do have IVPMI. So we have some good stuff here for today as far as data. Going to be key for Canadian data. Let's go and pull up the old spreadsheet, i.e. bias chart. Man, I spent 25 minutes on that doggone soapbox. But anyway, I thought it was key ahead of NFP because you know what? We've been so quiet, so dead. The markets haven't moved too much, including FX. They've actually had better moves than the indices. But I'm just saying, I thought I might as well just take the time so that we could focus on that, get in a pretty good prep for NFP. So with that, let's just go on and get started on the euro. Let's go through this here. No, it looks like the euro is sliding. Okay. So the euro post ADP remained under pressure, restricted to a tight range. Support on NFP day remains the weekly level of 1748. You can see that down here, with resistance at 1885. So lots of times when we do an NFP, we're not sure about the volatility. We'll have, you've seen that before, we'll have double support, double resistance. This is pretty much clear-cut case. 1748 would, and we'll move this back to the weekly. Look at the weekly chart. 1748 would allow, remember the low was 1751, so maybe we goose some stops, and then maybe the market holds. We'll see whether or not. So 1748 is going to be our key support for NFP, and on the upside, 1885. Let's go and move into cable. So cable closed slightly positive on Thursday ahead of NFP. Resistance on Friday will be 39.87. With support at 38.38. And let's go here. I think it was a 2 hour. I think it's still pulling off of the daily, but when it came up with 38.38 was, yeah, right there. You see this low here? So there. There, 38.38. So if we do break lower, maybe we goose some stops, we take out the 38.59, and then find some bids at the 38.38, and the market starts to push back higher. We shall see. Okay, moving on to the Aussie. So the Aussie traded in less than a 40 pip trading range on Thursday, fully immersed in the summer doldrums. Reference resistance on NFP day will be 74.47. So we're actually going with this wick right here. Actually, I believe it's a body that I went with here with resistance support at 73.31. So that body intersects with that wick. You see that? So I went with, it actually should be right there, 74.43. So 74.43, it's not 74.47. Let's move that, which is just above the weekly, which would allow them to goose some stops. And I think the support was 73.31. Let's pull that up. 73.31. Let's go move into the dollar yen. So the dollar yen on Thursday added to its rebound ahead of NFP day. Resistance will be 10.28 with support at 9.35. So 10.28. I know I had it right here. Let's see. What did I put? Yeah, I just went with the level 10.28. Thought I was hitting a particular wick or body. That's just the level 10.28. So, but that's what I went with in case they take it further above and goose some more stops going into the weekend. And then 9.35 is right here, that wick, the bottom of that wick. You see that? That's 9.35. That would allow them to take out the lows from yesterday. And we'd see some bids there. Or at least I believe that's where the bids would come in. Moving on to the cash dollar index. So the dollar index traded in a restricted range on Thursday ahead of the employment report. Resistance on Friday will be 92.83, which is just this big old range up in here, that key level we've had in place for a while. Remember, the market finally got above it, couldn't do anything with it. We kept holding, trying to hold above it. Once again, if you can't hold above it, once you fall back, it means you got to go much lower. Because here's the thinking. It's the same thing I told you with the gold. So here's the thinking here, and I don't need no doggone oscillator to tell me that. So you get above the level, okay? Hang on a moment. So you get above here and you're holding. So it's like, wow, they're knocking on the door. They're knocking on the door. We got above it, and people are like, okay, if I can just hang on. All right, finally we got to close above it. Okay, now we're on our way. Then look, I look at the bodies. Remember, I put more emphasis on the bodies than the wicks. So here you can see that that's a full bearish engulfing line. And then we hit some stops. But remember, people are still bullish, okay? So we hit some stops to go lower, but you end up finding bidders here because they're like, no, I'm not about to sell this. This thing's bullish. I mean, it's just a matter before it breaks out. So we come back with a hammer. So the market's still holding up relatively well. And they're like, the people that bought here go, I'm just going to put my stop just below here, but just below these lows. Might have some people say, well, I'm going to put my stop just below these bodies. I don't need to be stopped out all the way down here. But if it's going to hold, it should hold against this body close, blah, blah, blah. So the next day we close a little bit higher, like, okay, we're still above 93.83. Everything looks good. When you close, look, we fell below 93.83. So he's like, okay, well, big deal. We did. Yeah, they did. But look, anybody that's bullish now, they're like, I'm not going to buy there. What the hell am I going to buy there? They're just going to take out the stops here. So they're going to wait till we go much lower. Hence the follow through. And you can see here, we take out the stops here and the market tries to rally right back. Because remember, we took out the stops. So those people said, I'm putting my stops here. Hence why, like I said, people are saying, I'll put my stops a little bit lower. Person who's going to buy it says, I'm just going to wait because if it's filling here, they're going to have to go much lower. So it did rally back up. But then we still closed bearish, okay? We even closed below that low right here with the wick. See that? So then the market continues to probe lower, and that's what it's doing. It's probing lower to finally, which I thought we'd get to 91.66. When the market doesn't get there, they say, okay, well, let's see if it can hold. So we keep trying to, dawdle down here. We just can't seem to take it out, so they go on and follow through with this. And that's what I'm saying is, that's just looking at plain old price structure. And it's not so much you can't tell what's going to happen here, but if we break out above here, look how much the market finally, it finally gets going. Boy, this is a key level, this 92.83. Oh, man, if we can just get there, we're knocking on the door. Man, we fell back. You see here, we rotated right back lower. We come back solid. We come in here with a dark cloud cover, and we're holding and we're pushing again here. So it all looks bullish. Hence why when we broke lower here, there's no follow through. And they quickly buy it back up, and they push it here, and then we're holding. When we close lower, puts the market on a negative tilt here, and then you're saying, well, wait a minute. They're going to have to probe lower because they're going to test those stops. How much more can they probe lower? And so even if you're bullish, you're saying, I'll just wait until I can see the market kind of settle itself. So we rally right back up here. Problem is we close below that low here. That opens the door for us to test lower. They try to make one more college try. They can't do it. They close lower. And henceforth, we get the rest of these people just, saying, okay, my stops are there. I'm getting the F out of Dodge. Hence we do, but there's no follow through. So the market holds for the next few days, and now we're going to try and push higher. But once again, the proving ground where the rubber meets the road is going to be 92.83. And so there we're at going into NFP. And here's the key on the downside, 91.66. Maybe we fall apart. We're going to take out these lows and test and see how much selling is going to be below 91.66. Hence 91.66. Now let's go to Bitcoin. There we go. Okay, we already went and spoke about this whole thing about the Bitcoin, and we'll switch it to a 2-hour chart. and how it's almost like a similar picture of the way gold, but they actually made the most of their move, unlike gold wasn't able to go and do that. And you can see here when they took it, look at the difference. And once again, can't stress it enough. Look at the difference in the price structure. Look, we break lower, and I myself thought, okay, well, this is going lower because look, we rallied up in here. We got, I mean, remember we were looking for 41,300. Wow, they made it to, I think it was 41,662. And then they fell back, and this market looks like it's going lower. It tried to hold here at 38,913, I think that was. And then we break low on this, and we rally back up, and then we start to slide back here. And like, okay, this market looks like it's going to go lower again. But look at the difference. We take out, see here, once again, the price structure. Just look at the chart. You don't need all these silly indicators. Okay, look at that. We take out the lows here. You see, they're probing it. They're probing it. They're probing it. Get like this kind of like it's not really a hammer, but they aren't able to push this with any conviction on the downside. Even this one took out these stops here, and then we turn around and we rally. So here they're thinking, oh boy, it's going to get pretty bad. They take out the stops here, but when they take out the stops here, they don't get any follow through. They do get a hammer, and they challenge it one more time. They try to get up here. They challenge these lows, and boy, when this thing holds, look at this. When this thing holds, this sucker is off to the races. And boy, this is more about short covering as it just kept pushing higher and higher and higher and higher and higher. But the key thing is, they're not giving it all back like gold. They're not even falling back into the range. They're holding above the range. They're holding towards the upper end here. So now the tone of the market is turned bullish, unlike gold, which just looks like a failure. So anyway, moving on. Bitcoin broke higher Thursday morning, running stops up to 41,000. The coin is poised to break higher. Resistance for the upside break is going to be 41.6. Immediate resistance is 41,326. We'll go with that. And support is at 39,914, followed by 39,500. So 39,914. /500. Now let's go move into the SPOOs. So the SPOOs, SPX futures are on the precipice of another upside breakout. Immediate resistance is going to be 44.32, followed by 44.45. Support will be to 43.96, followed by 43.82. We did go over this a couple of days ago, and like Amanda and Jane were also talking about this area here. And if you look here, same thing here. Remember, we shared this about the gold. You see here, look, what a difference. And I hate to, beat a dead horse, but you can see here, look at the difference. We're pressing, we come back, we hold. We're pressing. I think even Amanda called it, and I laughed about it, called the 4370 a trampoline area. And boy, we just keep bouncing above it. And look how we keep staying. You see what I'm saying? I can't, once again, harp enough the difference between that and gold. And the point is, I don't even remember the last time I even traded gold. But I'm just saying is, I hate to keep harping on it, but once again, if you look at it and you focus now on the price structure and say, you know what, doggone, that makes a lot of sense. You know what I mean? Yeah, I can see that. I mean, we can't say where SPOOs are going. It certainly looks like they want to break higher. And certainly you're trading this range. You see here, range. If we get above the range, then we go with the extension, and it takes us to 43.73. Okay. So, but nonetheless, as I was mentioning, is you can look at here. And once again, if you looked at this, you'd say, this market is overbought. Okay, yeah, it's overbought. But what good is RSI or stochastics doing for you? Not a doggone thing. You see what I'm saying? Focus on the price structure. So anyway, that being said, we're looking for 44.32, followed by 44.45 for the immediate resistance. And support is going to be 43.96, followed by 43.82. And once again, the key is going to be, yeah, we're probably going to break above it, but do we get acceptance above this level? That's going to be the key. Not that we break above it, although you can see it, hey, do we start to see some selling against 44.30 or whatever the case may be? But do we start to come back in? Remember, I told you that the volume on the SPYs was only 37 million yesterday. I mean, I think that's probably the low volume mark for the entire year, but you can see why the range was so tight. But volume has been pretty light ever since June. Like, well, what the heck? We're already into first week of August. So that's what I'm saying is, I don't see what the catalyst would be to knock us down. Certainly not looking for that. And everything looks bullish overall from a technical standpoint. But now, do we run out of gas? And if we do run out of gas, that would then open the door, just like the same thing with gold, for us to rotate lower and test these levels. So there's with the SPOOs. We'll go and take a look at the NASDAQ. And you can see the NASDAQ. This sucker's still pushing higher. We showed that earlier. We showed that yesterday. If we look at the range from November to February, and then we go from here's from low to high, and we get this pullback. Not a huge one, but the most significant we've had so far. And then we take the same measured move. That puts us right to where we're at. Now, we're actually above it. But once again, are we going to be able to hold above it? If we can hold above it and we find acceptance above these highs, then that would portend to a new leg up. For right now, once again, as I mentioned, what I've been hearing is people have been just loading up on shorts all up in here. Not shorts, but well, it could be shorts also, but puts. They've been saying, oh, this market can't get above here. It did break above these highs here. You see what I'm saying? So if you look at it, let's go back here. So like, wow, if it can break above it, which is kind of like almost where we're at now here too, same situation. You look at it and you go, wow, if it can break above it, we're probably going to go with a new low. And you go here and like, oh, wow, look, oh, wait a minute. It's kind of acting a little bit dodgy here. Hey, we might slow down. We might be in the move for a pullback. And so there's been a lot of put buying, and we're still moving higher. We're still moving higher, and we're still moving higher. Remember the old, it's so overbought. It's so overbought. My RSI says this. My stochastic says this, blah, blah, blah. And then we get this pullback. I'm like, okay, well, I'm buying a put because I think this is it. This might be the end of it. This might be in this. Oh, wait a minute. It's still moving higher. Okay, now it looks a little bit tired. Now it looks, now it's okay. Now it really slid back. Oh, wow. It even closed beyond the, past the 20-day moving average. Now we're set for a really good fallback. Wait a minute. We're still going higher. So the thought is right now, there's a lot of puts right now, and maybe these people end up getting, one moment. Knock the piss out of their positions. Like, I can't take it anymore. I'm out. So what could possibly happen is we shoot up here and maybe we come back down. Doesn't mean we also just go like that, but we could end up saying, wow, it was a failed breakout. People have been looking for a failed breakout, been hearing, oh, it's a failed breakout. It's a failed breakout. It's a failed breakout. So if that does happen, we'll have to slide back in here. We'll challenge here. We'll challenge the 20-day. And then next thing you know, we're working a little bit lower, if that's the case. So how much further can this thing go on and move here? I'm just going to go for the actual 161% extension. That's way above it. But if people are going to get stopped out, they're going to get stopped out. So I'm going with the 15,330, the 161% extension of this move right here. There we go, right there. So let's say 1530. And the support. $15,000. Let's see, 77. Probably want to see the same overshoot a little bit. You see this close here? So right there. 15,063. Beyond that, let's go to, yeah, 15,000 limits here, but I think if we do a bigger overshoot, then it'll be right there at 15,029. Just going to go with this. Keep it simple for right now. If we end up pulling back next week, well, yeah, then we'll be looking at 11, and we'll be looking at much lower, probably right down here, not 14,950. But for now, this is it. And this is so close because if we were to come back, we'd probably overshoot it. And then this is where you want to be looking to cover. Moving on to gold. Well, we've already hit gold pretty hard in more ways than one, not only time-wise, but with the comments. But let's go move into gold. So gold once again has failed with a capital F. The metal is open to a slide. The immediate support is going to be 1792, followed by 1777. Resistance will be 1812. And right now we're still trading in the range. And while you went out, always wait for a couple of days. Remember, we got that move above 1824, and then the next day it went higher, and then it fell all apart. So we're still in the range. Moving on to crude, which actually crude is bearish now. It's no longer bullish. There we go. So crude posted a dollar rally on Thursday after being oversold for days. Most likely the move is about short covering ahead of the weekend as opposed to true buying. We referenced this yesterday. I posted the chart saying, hey, look, it's way down here. This is some support. And the reason I noted that because we got this little mini hammer. We pushed hard, but look how quickly they gave it up. And the concern is that they've got this sustained increase in inventories. Resistance comes in at 69.85. Oh, wow. Let's see what the high is, followed by 70.23. So let's see what got to. Pretty close. 69.85 followed by 70.23. So 69.85. Followed by 70.23. Support. Oh, God, the thing disappeared again. The heck. Support comes in at 68.75. There we have it. There's a bias chart ahead of NFP. I'll get that posted into the room. And thanks for joining us here on the European Crossover webinar.